This is coming as companies here in the U.S. are giving back to their employees in the wake of the tax reform overhaul. President Trump just tweeted this morning. He says tremendous investment by companies from all over the world being made in America. There has never been anything like it. The president writes now. Disney, J.P. Morgan Chase, and many others. Massive regulation, reduction, tax cuts, making the U.S. a powerhouse once again. He says, long way to go. Jobs, jobs, jobs. Joining me now to weigh in is the chairman and CEO of EY, global chairman and CEO, Mark Weinberger. Mark, it's great to see you.
Always a pleasure,
Thank
Maria.
you so much for joining us. So I know that you have been on panels this morning. You're talking to a lot of your customers and clients about what's taking place in the U.S., and it's the tax reform bill that is having a really big impact.
It is, Maria. We're seeing, obviously, it doesn't make the U.S. a tax haven, but what it does do is give us a competitive rate and allows companies to move their capital around without having to pay that extra level of tax. We are seeing supply chains being reevaluated, operations and investment being expanded. And as you said, we're seeing a whole bunch of things like increasing wages, bonuses, pension payments, health care payments. The real question, as you know, has been, are the businesses going to give it back to shareholders in stock buybacks and dividends, or invested in capital and labor? I think you're going to see all of that, but it's a positive, definitely positive momentum here in Davos.
And all of the above is positive.
All of the above is positive. It goes back into the economy.
Well, let me ask you this, because we see this tax plan having an immediate effect with these companies announcing these things, but this is really going to have a longer-term effect, isn't it?
That is a great point, because everyone's saying, what's this going to do next quarter? This is a landmark tax reform bill that structurally changes business taxes like we haven't even done since the 1960s. We talk about the 1986 Act. That was a lot of individual changes. International rules were written in the 60s. This completely changes how a company thinks about where to put its capital. It's not just U.S. businesses. We're talking to many Asian companies, European companies who are looking to invest in the U.S. to get advantage of the full expensing, the lower corporate rate, and a number of other benefits of just being a great market.
That's right. I was speaking to a European player recently, and he said, we had a whole plan to invest in Europe. We've shifted that plan, and now we'll be investing in America.
You'll see more of that.
Which is very positive. All right, there's that. The president and this administration getting high marks on the tax reform package, no doubt about it. But then there's trade, where there are some questions. The president yesterday announced steep tariffs on solar panels, on washing machines, while 11 Pacific Rim countries agreed to forge a new commercial bloc that excludes the U.S., obviously the U.S. pulling out of the TPP. What's your take on what's happening with regard to trade?
So I think this speech, as you in your lead you talked about, is going to be really important because the president has to balance enforcing the laws. I mean, this, putting tariffs on solar isn't, changing the whole landscape of trade. In fact, in 2012 and 2015, we had tariffs on solar. So the really uncertainty now is where's he go next? And we need to be involved in trade deals around the world. We can't be left out. 95% of the world's consumers, 80% of GDP growth is outside the United States. And so businesses want to be able to go there. The U.S. is an open market. We let everybody in. Trade deals are good for businesses in the U.S. They create jobs. So the question is going to be, does this lead to more and more retaliation and trade wars? Or is this enforcement of existing deals and a renegotiation of NAFTA, a renegotiation of KORUS, and discussions with China to get to a positive trade deal? That's what everyone's going to be watching.
See, one of the issues with NAFTA is it basically said to companies, look, you can have a factory overseas in Mexico, and you can produce cheap stuff, and then you can send them back to the U.S. and sell them in the U.S. So, of course, companies are going to do just that and hire workers at a much lower wage in Mexico. And then once NAFTA was completed and everybody started doing that, that became the template for all trade deals.
Well, it's true. But you think there's so many examples, Maria. You know it well. I mean, how do you even implement this? You don't know, with a car component parts going over and back across the border in Canada six times.
That's a good point.
An iPhone is 800 different companies work on an iPhone in 31 different countries, and the component parts all come together into the United States.
So what are they going to do? Pay a tariff every time they cross?
They couldn't even do it. You couldn't afford an iPhone if you had a tariff every level of it coming in the United States. You couldn't get the labor done if you tried to bring it all back to the United States. So we need to understand that this helps the United States, too, to have these trade deals in place.
So there's got to be a balance between fair trade but also not hurting the customer, because ultimately that's going to fall on the consumer, who's going to pay more for a product because the company that makes it is paying a tariff.
Absolutely. It's like a tax here that we just reduced. So, but you're hitting the nail on the head, Maria, as always. The pivot we've got to watch and see right now, from beating up on our trading partners for a lot of bad deals and upgrading necessarily trade deals, to starting to negotiating positively the new deals. Seeing if NAFTA will get done this year. We have a lot of negotiations coming up this month. Of course, the Mexican election's coming up. Our midterms are coming up, makes it hard. KORUS is positive. positively moving forward, so we're going to try and negotiate that. We got to make progress on those deals, and that would set a good signal.
Yeah, let me ask you, Mark, and turn to Bitcoin, because according to new research you and Ernst & Young did recently, more than 10% of funds raised through initial coin offerings are lost or stolen in hacker attacks.
Yeah, well, this is, as we know, is a really complicated area, and these coin offerings are plenty. There's over 100 different indexes out there where they're coming in. There's offerings. They are obviously susceptible to fraud and theft. They've become more of an investment than a currency, and so I think appropriately you're having governments look at it. What we pointed out there is that investors, it's not an investor, it's really a tool to be a currency. You have to be cautious how you're investing in them.
One more risk to watch around
Always,
Bitcoin.
a lot more.
Mark, great to see you.
Always, Maria.
Thank you so much for joining us this morning. Mark Weinberger, EY. Coming